Hello and welcome to Nutmeg's Investor Update for November. I'm Tom Kilton, a financial advisor here at Nutmeg. If you think you could benefit from financial planning advice, please do book a free call with the team via the website. This month, I'm joined by Brad Holland, Director of Investment Strategy. Hi Brad.
Hi Tom.
So how did financial markets fare in October?
Well, the US stock market made new all-time highs in October as US data remained resilient, but also as a modest phase one trade deal appeared more likely. Now, when risky assets perform well, bond yields tend to rise and the US dollar tends to fall, and that also occurred in October. Even commodity prices continued to recover, especially broad-based mining commodities. Now, emerging markets, they did a bit better than developed markets too, in line with those commodity price rises. But it was only the US that reached new all-time highs during October. Now, in contrast, the very strong UK currency appreciation led to a near 2% decline in the main UK equity index.
And what were the key economic and political events behind these movements?
Well, the US Federal Reserve delivered its third rate cut, along with the message that that might be the last cut, as long as their positive economic view plays out. Now, Japan and Europe, well, their central banks still are in quantitative easing mode, trying to boost liquidity and sentiment in those economies. And while it's early days, there are some signs that a global manufacturing recovery may have begun, an idea supported by the mining commodity price rises I mentioned. Manufacturing has been at the leading edge of economic weakness over the past 18 months, so if a trade deal can get done, that should help nurture any manufacturing recovery. On the US-China trade deal, not much has changed except the willingness for both sides to settle for an easy phase one deal. China's economic growth continues to slip, so it needs a deal to help keep growth ticking over. And the US needs to sell their autumn harvest.
So let's return to the UK for a moment. What are the prospects for a Brexit deal?
Well, we almost had one. But as we expected, we are left with a short extension leading into a December election. The pollsters don't really know how the ordeal of the last 3 years have changed party political allegiances versus Remain-Leave sentiment, but polls have pretty consistently moved in favour of the Conservatives. Now, since no deal seems to be off the table, that's a favourable outcome for markets.
Okay, and against this backdrop, how did Nutmeg's fully managed portfolios perform?
Well, the weak dollar and very strong sterling, combined with the weak bond markets, they subtracted from the positive global equity performance over the month. Remember also that UK equities fell almost 2%. So with this backdrop, the fully managed portfolios declined between 0.2 and 1%.
And with this in mind, have you made any changes to the fully managed portfolios?
Yes, we made a change in the middle of the month as the risks around no deal and the UK election improved somewhat. Obviously, the election has still to be held, but we felt the balance of risks improved enough to no longer be underweight to the UK currency. We also swapped out some UK bonds into UK high-yielding corporate bonds and shortened the maturity profile of our US government bond exposure.
And this month's customer question is about American politics. Should we be worried about another US government shutdown in late November?
Well, the current US government financing bill runs out on the 21st of November. There is a lot going on in Washington at the moment with the US-China trade talks and the presidential impeachment proceedings. There doesn't seem to be a huge appetite for a budget tussle as well. Now, lawmakers are reportedly negotiating an interim budget till January or February. In any event, government shutdowns by themselves don't tend to worry markets too much.
Thanks, Brad.
Thanks, Tom.
And thank you for joining us. As always, if you've got any questions for Brad, please submit these via email, social, or the comments section below. We look forward to seeing you again next month.